Hi, William Sheriff, Executive Chairman of enCore Energy. We're America's leading ISR firm, in situ recovery of uranium. That's our business. We only use in situ methods and have been in production now going on our second year and have expanded operations considerably and looking forward to a significant growth period in the near future.
Mr. Sheriff, good to see you, sir.
Good to see you again, Matt.
Now, you've been romping around the shop floor this morning. The great and the good are here, it seems.
Indeed, indeed. There's the entire world's nuclear utility business is here, at least in some form or fashion, with few exceptions.
Not too many producers, though.
There aren't too many producers, so in fact, there's a real shortage of them. There are a lot of wannabes, and some of those certainly will be in the near future. But I think the last year or two, we've seen a lot of hurdles to that production. It's a lot easier to talk about than to actually do.
There is that. In fact, we've been having that conversation a lot today and yesterday with his, people wanting to talk about demand, and we go, okay, the demand is there, we get it, and maybe you can tell us about a little bit of what's going on in the US political side of that as well in a second. But the supply seems to be the troublesome component here. It is a lot harder. It's possibly even a little more expensive, therefore, than people realize going forward. What's that do for companies like you in terms of scarcity of product, in terms of competition?
Well, I still think probably the biggest key thing that's hard to fix, because most things you can fix with more capital. The one thing you can't fix is the shortage of talent. And at enCore, we've always said, I've been talking for a number of years now, I've always said that our biggest assets are people, our bench strength. We're probably the only team out there that can go and open up another duplicate operation and staff it with talented people that have had experience in the industry. And that's cost us a few extra dollars, but it's the indispensable part of really what's propelled our significant performance in the last 4 months.
But you had your own troubles at the beginning of the year.
We did. We made a significant management change, and it was viewed by some of the retail sector as a bit of a knee-jerk reaction, but it really wasn't. And we came out right away with a couple of plans, and part one, part two. Didn't really expect that to move the market because everyone's got a plan, right? But what we've done in the 4 months since then is actually implement the plan and actually overachieve what we'd expected to do. Our production rate on a daily basis has gone, depending on what time frame you're measuring it against, from up 200% to up 300%. Okay. And it's just a matter of urgency is the matter of the day, and it's every day for us. At the time, obviously people thought it was a crisis, and it was a crisis of confidence, clearly. But and not one that would be unexpected given the magnitude of the management change. But as I said, it's just a matter of we have to have urgency every day. It's not a situational deal. Our uranium comes out of the ground quicker than most. We don't have the typical problems that you see on restarts. Certainly every deposit's different, but the ones in South Texas, you are able to recover so much more of uranium so much quicker. Right. Which gives you, your cash flow is obviously coming in quicker, but so is your need to stay ahead of that in terms of drilling and development drilling. And the only way you can do that's with more rigs. And probably the biggest significant metric that we look at internally is our number of days average to put a new well on. That is either an injector or a recovery well. And oftentimes in the process of in situ, what your injector well and your recovery well today will be reversed before your well field's done to make sure you get as much as you possibly can in recovery. So we went from roughly a little over 7 days average of getting a production or injector well into just about 1.3 now. And that metric is rather profound, but it really explains that in order to up your production, you've got to get more wells in the ground. Right. More wells, more fluid flow, more uranium going through the plant, higher recovery, higher daily production rate.
Okay, so I was going to ask you, how have you fixed the problems? Because, I think the market did react poorly to the news back in, whenever it was February, March. What have you done actually operationally in terms of people? You told me some of the outcomes, which is 7 days under 1.3 days, and you talked about faster recoveries, etc. But how have you achieved that? With what? Have you thrown money at the problem?
Not really. Our G&A has been fairly consistent. It's high, like most of us companies that are trying to grow, which brings me to another subject of M&A that we should probably chat on before we're done. Yeah. There are lots of opportunities there. But in fact, we were quite worried about it when our price was half price, that somebody would be lurking out in the shadows to acquire us. Fortunately, we managed to get through that. But we essentially removed our production staff, at least the top of it, in terms of the CEO, COO, and lead plant manager.
You've removed people?
Well, we severed the relationships, you know,
Okay.
and made a management change, you know, and it's
To what end?
we certainly
well, I
not.
know to what end, but why did you identify that as the issue?
We felt that the sense of urgency was something that needed to be reinforced and the rule of the day, actually,
Yeah.
to deal with this. And you know, we certainly wouldn't have gotten to where we were without our former CEO, Paul Goranson. I mean, he's a legend, and rightfully so. He, you know, built the plants and got us into production at the head of the pack here. So, you know, it's building blocks, and it was time for a new set of building blocks.
So that was the
really.
setup. What you're saying is operationally, day to day moving forward, you weren't seeing the urgency.
We weren't seeing the urgency.
entrepreneurial
Well, here again,
spirit.
7 days to put a well in,
Yeah.
1.3.
Right.
And so what it is just a reshuffling. We did it all with internal promotions.
Yeah.
We didn't go outside to source anyone to change these problems. We just changed our operating efforts, if you will, a game plan. And sure, we have to pay a bit more for, ask if we put more money in. Yeah, we're paying a bit more for drill rigs. You know, we've gone up from, I don't know, 12 or 14 at the time to 29 now, and we'll have 32 by the end of October, which is really where we want to be. That gives us enough to stay ahead of our production, yet increase our exploration activity and advance, get way ahead of the production.
Let me flip. You're not doing anything new technically.
No.
What you're saying is we've got to expect the recoveries more quickly and then react to that because we need to be on to the next thing, or you get a redundancy.
Stay ahead of it.
While sitting at, stay ahead of it.
I mean, you know it's coming in. You've got to stay ahead of it.
Okay.
Otherwise, you get these, you know, rather significant drop-offs in production, which we experienced. And now, I mean, you always get a drop-off after the immediate impact, but those peaks are coming more frequently. So our averages are much better.
So talk to me about what your understanding now is of the decline curves. What do you know?
Well, and you know, there's a lot of misunderstanding of that. It's actually can be a decline curve, which is common terminology in the oil and gas industry, but really it's a finite amount of material you're getting out of the ground, whether it's oil, uranium, whatever you have. We prefer to look at it as in terms of a recovery curve. We're recovering the field's potential in a much quicker time.
Okay.
Which is positive in that it accelerates your cash flow. But it does put the demand upon you to react constantly at a higher rate in terms of replenishing that and drilling ahead of it.
Okay.
And that's where we've really shifted gears and moved forward.
So what are your expectations then moving forward? Can you continue to grow at that rate, or would that require more rigs? How optimized can 29 rigs get?
Obviously, you know, we've got 29, we will go to 32. Obviously, we've looked at it and we know what our capacity of our plant is. And you obviously can't continue, you run up against a wall in terms of increasing your efficiency. You know, you reach a point of diminishing returns. So we're quite happy with that. There's still some incremental movement that we can make that will help. We're still making some tweaks internally to the plant that our you know, chief engineer or chief operating officer has come in and tweaked and fixed and adjusted and, you know, fine-tuned, I guess is a good word for it, which has helped and certainly incrementally helped. But the big changes are simply just staying ahead of it and you know, getting the I guess flex, if you will, in terms of your number of drill rigs to where when you have an underperforming drill rig, you simply send them away. I say we're at 29 now. Those aren't the first 29 that showed up. You know, we've probably had 36, 37 rigs come in.
What do you think? Do certain rigs work better? Do they work better?
Somebody's underperforming. Thank
you very much. Is it the team or is it the rig?
No, it's the rigs because we do all that through contracting.
Okay.
Yeah.
Right.
And you know, one of the things we have done is we have purchased several rigs and on a leaseback, which is actually providing us income, you know, from that leaseback, or certainly better rates on the contracting and the drilling. But if we aren't getting ideal performance out of drillers, since we've got a comfortable number, it makes it a lot easier to send the poor performers home.
But let's talk about the field that you're working with. Like, I'm imagining it's like a dredger kind of moving through the river.
In essence, we're following a sinuous redox boundary, which much is like a meandering stream, only obviously underground. Absolutely.
So it's a good analogy. How much of that have you got ahead of you, so to speak? Because you want to get onto acquisitions in a second. So right now, how long can you keep this going?
Glad you asked. Quite a while. You know, I don't have a finite number for you because we keep finding new resources under the existing ground. One of the things that we've done, and there's a couple of really key important parts about Alta Mesa, which is our lead project, if you will, our first multi-decade project. Mm-hmm. We do have another one coming on in South Dakota that was recently Fast 41 designated by the federal government, which was a welcome sign. That doesn't come on until 28 or so, though. Right. And here again, that's subject to a number of things. But looking at Alta Mesa, we recently announced the acquisition of Tacubaya, which is project immediately to the east and down dip of our current resources. If you
How,
look,
how deep are we talking?
well, we're still under 800 feet, so it's, you know, we're now at 5 to 550, 600 on Alta Mesa. It's slightly different, just tails off to the east. Fluid flow has been from the west to the east, so that was a critical piece of the property for us. Over 200 property owners. It's taken over 2 years to get them all lined up.
Yeah.
It's, you know, very difficult to get consensus among 3 people, much less 200.
Yeah.
And so, you know, kudos to our land department for that. And it's an effort that was started years ago, so that wasn't anything new. It just took time. Mm-hmm. But the area had drilling, significant drilling by Chevron in the 1979, 1980 timeframe that established mineralization in 5 sands. Mm-hmm. We have mineralization in 7 on the Alta Mesa side, but obviously thousands and thousands of drill holes. So we know it continues. When we were putting out our maps for years, they all terminated against a perfectly vertical north-south line. Yeah. Well, Mother Nature doesn't have north-south straight lines or any other direction straight lines. So clearly it was a property boundary. So we know the well field mineralization we were following. The well field doesn't extend because that's a permit boundary, but the geologic accumulation of uranium obviously didn't stop at a property boundary. So it's been a high priority for us and one that we're really glad to have, and a significant use of funds from our recent financing. But equally important, we'd gone back into the main area of Alta Mesa, which has had 7 productive well fields. Now we're on the 7th one now, some during a previous company, but during our ownership, this is our first one. We've identified all the areas that had over a minimum cutoff grade. Well, here again, this is looking at it globally, but we have 7 productive sands. And while each one may be mineralized, they don't overlie each other directly. These are meandering, sinuous structures, so they may cross each other. Mm-hmm. Point being, in your exploration, you drill fences and you find and identify your target, then you infill drill along that given trend in that given sand. So what we've done is we've taken each sandstone separately and looked at what are the cutoff grades. Yeah. And we're seeing new trends emerge within that giant body of data. And so what you do when you see a new trend is you go in and start again with your fence, and then you do the infill drilling between. Our first success story out of that is what we call Wellfield 3 extension. We've already got that in permitting because we've identified another sand that partially underlies or overlies, and I even don't recall right off which one's which, because we've actually found 3 of these areas so far. And what it is it's going back in the data with thousands and thousands of drill holes and looking at it on a much more granular basis. Not just where is the ore, but where is the ore specifically in a given horizon. And then we can go back and follow up on things that no one's ever followed up on. So it's certainly an extension of life to the main area, but it's opening a whole new chapter, or maybe perhaps 6 or 7 new chapters.
Okay, and I kind of want to come back on that in a second, but I've got to address something, which is the money that you've raised recently. Because it kind of touches upon everything in terms of exploration, buying, acquisition, and portfolio extension in organic or other ways. So, well, maybe talk about the money raised. Why did you need to do that now?
We didn't need to do it. It was an opportunistic situation. It was presented to us. The cost of capital is something we've never seen before in terms of a 5.5% coupon on a non-secured note. I mean, it's almost as good as the federal government rate. Mm-hmm. And well, granted, we may be almost as creditworthy as the federal government, maybe more so, we'll see. But nonetheless, it was financing that we've not seen before. Not only that, given the structure of being a convert that's payable in cash or stock, unsecured, it gives us unparalleled flexibility. Doesn't tie our hands as to what we can do in terms of pursuing other business relationships. And it introduced us to an entirely new level of investor. I mean, during the more than 20 some discussions we had with major institutions, there were 1 or 2 of them. One of them we've dealt with in the past. Out of that was, I've been in the business a long time. The rest of them I've never spoken with. Most of these funds were 10, 20, $30 billion funds, in one instance, triple-digit billions. And while traditionally converts are done almost exclusively to hedge funds, roughly 45, 50% of ours were done with long holds. And you can see that and verify that in the amount of the down you see, because typically hedge funds do a convertible note and then they immediately in the next day offset that by shorting your stock. And you could expect 20 to 25% short if you're done to 100% hedge funds. We saw about 12%. So roughly half of ours were long or long-oriented funds. In fact, many of the funds were so big that they had a hedge fund component and they had a long component, and the order was split somehow between the two.
Okay.
So it really opened an amazing number of doors to a completely new level of capital, and largely generalist within the U.S. was our biggest segment. And as you know from our previous conversations, we've been working on that, planting the seeds. Yeah. Because that's obviously the biggest box of cash out there.
So it's certainly what we're seeing certainly on the institutional side is the type of new money coming in. It wasn't like more of the same. It was a different type of money coming in.
Completely different.
And much deeper seated as well, as you're intimating there. I assume you can't tell us some of the names.
No, I'm not going to mention any of the names. We like to keep our relationships.
I got to ask.
But yeah, it doesn't hurt to ask. In fact, I'd be disappointed if you didn't. But
so I think that's really good news. And what was the total quantum?
We did 115.
115.
And it was upsized from 75. And we were still significantly oversubscribed.
So it's kind of interesting. You've been quite careful with the balance sheet and who comes. Obviously, boss deals happen in the background, and you've been able to raise money when you've needed to or wanted to. So I think people are paying careful attention to the structure, which is the structure is really, really important. Now let's get on to the bit which I wanted to, which is how that money helps you. Okay. Because I think the thing I've noticed, and I've had a few of the companies in here, you've got a little piece of different projects all around the place as well. You're sort of keeping your eye on people by having a little nibble of each.
Well, and we aren't happy with just our current position.
Yeah.
We're the only company out there, I think now, that at least certainly in our arena and our part of the world, that has 2 plants that are operational. I have a total of 3, but one needs some significant R&R to come online and may in fact be incorporated into one of our other plants rather than having 3 separate centers of operation, just increase the size of one. That decision hasn't been made yet, but certainly an option for us. So we've always concentrated on, after our people, here again, is to have a pipeline of projects.
Yeah.
These ISR projects are great. They are highly competitive on price. They're highly advantageous in terms of permitting and even reclamation using oxygen as opposed to acid, which were exclusively oxygen, so it makes the reclamation easier. But we can't compete on volume or longevity with some of the big hard rock mines, especially the Camecos of the world. And so as such, you need to continually, here again, urgency. You need to be developing things ahead of not only your production, but ahead of that project. You need to be a bit more urgent in lining up your next project. And so, we've done that, and recently our South Dakota project, as I mentioned, got Fast 41, which is certainly nice. We have our NRC permits there. But the NRC is the lead agency in making sure that, and this is something people don't understand about Fast 41. Yes, it gives you a much more certain and much more acceptable timeline to get through all of your filing. They even assist in terms of offering assistance to the state and including them in the overall process, as well as indigenous groups. But it puts a burden on the company to meet their timelines because it's completely transparent. It's available on the government websites. And so it's a two-part partnership. It's not like the government's just throwing you a bone.
Here's your 90-day plan.
Yeah, you have, if you miss your timelines, but out next come in. So it's
good pressure.
It's the way it ought to be. It's good pressure. It's incentivized pressure. And you cut your timelines dramatically, you increase your certainty. So we felt strongly that we would gain that, and you have to apply for it. It's not something that's just given to you. But we felt that we had a very good case for it. So that was part of our raise, a significant part, because now we have to start condemnation drilling. We have to start plant design. These sort of lead projects
But so like a known timeline or a known outcome. Versus a kind of vagaries
certainly far more certain, yes.
We'll broadly spend it in this fashion, which is what we see a lot.
Our budget, because of the ready availability of significant low-cost cash, we did expand it. It's certainly not a 12-month budget or an 18-month budget, much more like a 24. And some of the aspects in there are much longer than that. And I won't go specifically to it, but we have our eye on roughly 20 exploration advanced projects in the U.S. that are partially permitted. Of those, we expect to, or we budgeted, maybe we'll be successful on acquiring 4 or 5 of those. And so with the acquisition costs, especially down south where we're competing with oil and gas, and exploration for each one, we have, I think, $12 million of that budgeted for that longer term broader basket of new advanced
Do you
exploration.
think the market will understand, recognize, and reward that, or is that something that has
only if we
future
perform.
value?
Only if we perform.
Only if we perform, right?
Yeah.
Okay, but because it's the timing how you spend your capital is going to be important as well, right?
It is, and here again, we've been borderline on positive cash flow for a while. Our first quarter, we changed to GAAP because we're a U.S. reporting issuer.
Yeah.
We were right on the cusp of being positive cash flow. Our income's very lumpy, so second quarter we weren't close. We only delivered 60,000 pounds in the second quarter.
Yeah.
The bulk of our deliveries here are for the second half of the year, so we're optimistic that we'll see significant.
Are you going to have to buy
there.
any?
Sorry?
Are you going to have to buy any?
No.
Okay.
No, this year, that was our first objective once we had the big change in March, is to make sure that we didn't have to buy.
Okay.
And it was probably a lofty goal at the time, considering where we were.
Yeah.
But we've been able to do that. And right now we still have, a good 4 months of the year left, but we're still quite confident we can do that. In terms of that, we did put out in November of last year, first part, our production, our delivery schedule of required deliveries on a 5-year blended basis going forward for all of our contracts, because we aren't allowed to specifically name any one of them.
Yeah.
But that gave investors an expectation of our deliveries this year. And we announced right away that we were able to defer 75,000.
So there's wiggle room there. Okay.
But that's the only deferment we've taken, and we're highly confident we'll be able to get to where we need to be this year.
Okay.
We aren't going to have a lot laying around extra, mind you. But and then next year, we realized that there's a likely shortfall because we were over contracted. But we've already secured arrangements to be able to contract into a small amount, 100,000 pounds.
Yeah.
And depending upon our contract, on our permitting schedule for Upper Spring Creek, which is the next project to feed Rosita, that's already well underway construction-wise, and it'll be finished within the next handful of weeks. Certainly by the end of October, it should be finished on construction. And we're awaiting a final permit there for the underground injection control permit, et cetera. But that could see production. Our visibility on permitting in Texas is very good. But the crystal ball, nonetheless, is slightly opaque. I can't tell you if it's going to come this afternoon or if it's going to come December 31st.
Right.
But we're pretty comfortable in that range.
Okay.
But it makes a big difference in terms of our production. If we get that in September, we may actually see some startup production in December. If we don't get it until the end of December, obviously we aren't going to see it until, maybe February. So that definitive timeline on permitting still is enough wiggle room to affect which year we're going to see the production in and how much in that year. So, we're very happy with our permitting regime there, but, investors expect you to be able to pinpoint exactly what day you're going to flip the switch. And I'm afraid it doesn't work quite that way.
No, I think that's a lot of people are finding out. But do you get kind of credit with the institutional conversations? Do you get credit with government conversations for having historically producing now and solving problems?
Sure. I mean,
but that's more so, that gives you access to capital, but is it, does it give people enough confidence? Does it afford you cheaper capital? Does it afford you to be front of the queue compared to some of the people talking a good game?
Yeah, no, it clearly does. And, it's kind of an inverse relationship, though, because a lot of the guys that want to be producers are actually undercutting the margin in terms of selling to utilities.
But they still
But there's
deliver.
a greater deal of risk of delivery.
Yeah.
And what I think a lot of investors don't understand is that if they're unable to deliver, that becomes a short.
Yeah.
So that becomes an upward pressure on the market price. So it's a double-edged sword that here again can come back to haunt wannabe producers if they can't deliver on time. Then suddenly, not only do they have a CapEx burden and the usual hurdles of getting into production, they also find themselves short a commodity in scarcity.
Yeah, and it does happen. People are enthusiastic. They want to get a deal, but it's like the deal structure. If I'm a utility, I'm factoring that in.
Sure you are, and you aren't relying solely upon that. That's sort of on the
I'm definitely hedging that one. Okay.
But no, it gives us credibility as well with the federal regulators, is that just going back to the Fast 41 again, going back to our permitting in Texas, is we're established, we have a track record, and that gives them some certainty of counterparty reliability that we'll be able to deliver and meet our timelines as well.
So Texas is good.
It's great.
New Mexico?
New Mexico, we'd created a new entity, and we'll be doing a hybrid spinoff, if you will.
Yeah.
That company has gone through a couple of raises privately. The enCore still owns roughly 65-70% of the company.
Okay.
and it will be looking to go public hopefully before the end of this year.
Okay.
Here again, that's one that's got an awful lot of resources, but it's not a geologic question. It's a permitting question that's heavily reliant upon community relations and engagement in New Mexico. Certainly it's not at the same end of the spectrum in terms of permitting certainty that Texas is. If it was, we would have never gone this route. But we've got plenty of projects in our pipeline and more defined timelines of getting to production. Here again, our customers purchasing our uranium want that certainty, and so we need that. We intend to maintain a significant influence and piece of that, and obviously we'll be, I think enCore's dividending out or spinning out, if you will. I haven't figured out exactly the mechanism yet, but we will be putting out 70% of our interest that we retain in that company, Verdera Energy. 70% of enCore's retained interest will be spun out or dividended out to our shareholders.
Okay, partnerships. Okay, you got to pick your partners carefully. Yeah, you do. Boss. They're having a few changes, making a few changes, I should say. And how does that affect your relationship with them, your expectation, and does it fall foul of any agreement that you've got in place?
No, everything's doing well at this time. I mean, I guess all of us tend to spend a bit of time in the barrel ourselves, and it's their turn apparently. But you know, I won't comment upon their individual situation just because I'm not that familiar with the assets. I mean, we certainly had that asset under Uranium One when I was there on the board.
Yeah.
But and they've done better with it than we did. So you know, hats off to them. And in fact, one of our senior directors, Dennis Stover, one of the founders of the process, was actually down there in the interim years trying to help them move along after having been with Uranium One as well. So you know, I don't know whether it's completely overblown, partially overblown. I just don't know. But you know, I mean, the fact is they're still producing uranium, and they've still got quite a healthy treasury.
A lot of uranium.
And some uranium on inventory. So you know, I think what's the old saying? You know, rumors of their death are a bit premature.
I think so. Like, and Paladin obviously went through the same thing last year.
Oh, and we did.
And you did, yeah.
We have very personal experience with that.
Yeah, I think the point is there will be stumbles along the way. It's not ever smooth sailing. If it was, everyone would be doing it, right? Okay, and in terms of the way that you're kind of reading the market, I think people are, I say, new money's coming in, different sorts of money coming in, big money coming in, mainly downstream, but even upstream, lots of conversation about M&A, lots of conversation about roll-ups in Wyoming and Utah.
I can tell you why.
Yeah.
I mean, it really boils down to this. I mean, there's several of us that, you know, are on the cusp of or looking at £1 million a year, maybe 2 or 3 years out, maybe £2 million a year.
Right.
And then there's a whole other group behind us that's, you know, a year or two behind that has that same potential.
Yeah.
And we're all spending money like crazy.
Crazy.
Have a big G&A, all of us do. And
House is a better way.
You know, if you combine Company A and Company B, or Company A and C, or Company A, B, and C, you get increasing efficiencies. Your G&A may go up 20%, but your production doubles. Suddenly you go from teetering on, or maybe even positive cash flow, to actual earnings, literally almost overnight. I mean, assuming you have a successful integration. And if you combine two of them, so your G&A goes up 35%, and you've tripled your production. You suddenly become, you know, a much more substantial company that the analysts can evaluate on such crazy things as EBITDA. And
I know, but I don't even think G&A is one thing, right? But it's not it doesn't amount to a whole hell of beans, quite frankly, in relation to people who can actually get the goddamn thing going and get the uranium out of the ground.
It is a big plus.
And that it's a major plus because people pay for that, right? Rather than just worrying about market valuations, right? You got to get the revenue flowing, like proof of concept, route to market, all that kind of good stuff.
I guess that's always been one of the rubs of the extractive industries, right?
Yeah,
I mean, it's a lot easier. It's a bit romantic, and it's a lot easier to talk about, but the actual doing is what really separates the wheat from the chaff, I guess.
Well, I think in my days, back in the oil days, what I liked was the quick kind of turnaround, but it was oil. It wasn't radioactive. Anything. So there are a few regulatory controls around that, and transportation, all that kind of good stuff the whole way along that food chain. But the ability of a team who've been there and done it before cannot be misstated or underrated. It is critical, and I'm seeing a lot of kind of stranded assets because the team don't know what they're doing. Technically, the team don't have access to the capital markets, which is a real problem for them. And their model is, I think, unfortunately, trying to see who will come in and rescue them, like the damsel at the top of the tower.
Well, and even those that have a good decision maker or a very knowledgeable person, most of these companies have one or two. And
It's hard work.
even now, after our significant changes, we have discussions. There's one guy that leads them maybe, but it's a collaboration. It's an exchange of ideas. We've got such experience in the industry that it's not a single idea. It's a collaboration of ideas, and I don't care who you are, you don't know the answer to everything.
No.
And so having that strong technical strength and deep bench strength not only serves you well when you have a gap to fill, and an urgent gap at that, or an immediate gap, and instilling the urgency, but it gives you a continuing strength in terms of collaborative ability to not only solve problems, but to increase efficiency. Great, things are running perfectly. Well, are we happy? No, let's don't rest on our laurels. What can we do next?
Working
right?
perfectly
to improve
now.
Things. Yeah.
But we've got to be ready for when it doesn't. Yeah, no, it's a challenge, and certainly what I've heard of the past few days is the fact that people are waking up to the fact. But they're in the junior mining space. What I want is I would love the utilities to wake up to that fact, and recognise that this is going to be hard-fought pounds that they're trying to buy. So it might take a little bit longer than they thought.
Well, and I think that's always part of it.
It is always part of it.
Thanks, Matt.
Keep
It's
going.
always enjoyable. We'll check back in. It's obviously a picture in motion, and it will change, and onward and upward.